A lot of things have changed here in our local real estate market. We've appreciated 20% in the past year here in St. Augustine across the average prices. And, I've had a lot of buyers get discouraged, and they've decided, you know what, I'm going to rent and then I'm going to buy when the market cools down. Or maybe they're going to rent first, figure out where they want to live, and then buy later. Everyone's situation is going to be different, and I'm going to cover renting versus buying here in St. Augustine. And we're about to get after it right now. What's up, everybody? This is Thomas with Keller Williams here in St. Augustine, Florida. And if you're looking for everything you need to know about eating, working, sleeping, and what it's like to rent versus buying a home here in St. Augustine, then this is the channel for you. So go ahead and tap that subscribe button below, like the video, and if you have any additional questions, go ahead and leave a comment. We have videos coming out every week, so make sure you subscribe, and we have people reaching out to us all the time. So whether that's a call, text, or email, reach out directly to me. It comes right to my cell phone. So whether that's a call, text, or email, I'm here for you. And also at the very end of the video, I'm going to cover what I consider a deal to be in this market. So if you're looking for a deal in this market, then I would definitely stay tuned towards the end, because I'm going to cover what I find to be a deal in our current real estate market in 2021. The first thing I want to cover is to give a little bit of market overview of what's going on here in St. Augustine. As of right now, we have a 1.46 absorption rate. And what that means is necessarily we have 1.46 months of inventory. So when we're talking about inventory, we're talking about homes that are available on the market. So if we were to stop putting homes on the market today, we would run out of homes entirely in a month and a half. So that's a completely different market where we've seen in the past where homes have sat on the market for 3 months, 6 months, and even further past that. Our days on market went from 61 days last year to 28 days this year. And some of the best homes are being scooped up within the hour or before it even hits the market. Just depending on how on it the agents are, because we do have a coming soon tab that lets us know when new homes are coming to the market. So a lot of the best homes are being scooped up on the first or second day. I know myself as an agent working with buyers, if they're looking for a specific home in a specific area that is highly desirable, we have to get in that home the first or second day, or they don't have a shot at all. 1 in 4 contracts is a cash offer. And I actually imagine that number is a conservative figure, and it's probably a little bit higher than that. We also have 37% of people that are going into contract right now. Those people are relocating from another area. So that's driving our market up, because people are relocating from more expensive areas, and comparatively, our market is a deal. So what does this mean? This means that the sales market is very competitive. And that also in turn has made the rental market just as competitive. We had a 3-bedroom, 2-bath with 1-car garage that was probably about 1,300 square feet up for rent last year, and it went under contract for an annual lease for $1,600 a month. It came up for rent this year again, and that same unit is going over $2,000 a month. Things have changed drastically here, and that's because of our competitive sales market. So if you were looking to buy a home, maybe you've put in a couple of offers and you've lost out on it, and you've decided, you know what, this market isn't for me. I don't have the ability to win. So you decided that you wanted to rent instead. So the people that are losing out on offers are going into the rental market. And you also have the people that already were in the rental market going in there. Prices have appreciated, and they're like, you know what, I can't afford this market. I've been priced out. So now they're forced into renting as well. Then also you have the new construction people who have all, they've been waiting on the new construction, the supply chains, all this COVID, all this stuff. And it's taken 2 months, 3 months longer than they've expected. They've had to go to month-to-month rentals or extend their leases. So they're staying in the rental market too, which is causing a scarcity in our rental market, which is causing the prices to go up. This is kind of the rules of supply and demand. Right now there's no supply and there's tons of demand. So with that, prices are continuing to go up on both our sales and our rental market. Both areas, buyers are burnt out. They're on offers, they're losing out. On rentals, they're losing out. Even on rentals, you have to put an offer in on the rental to just get what you want. And getting a rental right now is very scarce. Now, if you're looking to rent, I didn't pull any stats. I just did a quick search online, and the cheapest thing that I could find was a condo that was 3 bedrooms, 2 bathrooms for $1,600. Now, I use 3 bedrooms and 2 baths as a filter just to kind of hit the most people possible. So if you're looking for less bedrooms, then possibly you'll be able to find something cheaper. If you're looking for more, then it's going to be more expensive. But just for a happy medium, I used 3 bedrooms, 2 baths, and took a quick look. But most of those are going to be way over $2,000. I saw things on the low end for $2,000, on the high end over $3,000. So for a happy median, I would say that you're going to be looking to spend about $2,500 a month if you're looking for a 3 bedroom, 2 bath home. Whether that's a townhouse or single family home, the prices are going to vary, or a condo. Those are all going to vary depending on the type of home. So $2,500 a month. You also have the first month, last month, and security deposit. So roughly you're at $7,500 and then paying someone else's mortgage. So $7,500, and hopefully you're going to get back $2,500 if you get your security deposit back at the end of the year. Now, maybe that doesn't fit your situation. Maybe you're relocating and you do really want to buy. You have to do a month-to-month situation. Now, I did a quick search on Airbnb or Vacasa. You can do your own search as well. But for the most part, the lowest price that I could find for a month-to-month situation was $2,500. And to me, I think that's personally a steal. This is right now in the month of September. So moving forward, as we get into the holiday season, I imagine those prices are going to go up, if not double. But I would expect to pay at least $3,500 a month if you're looking to do a month-to-month situation while you figure out where you want to live, or if you want to build, or how you're going to move forward on your next home. Now, those were both of the renting situations, so let's take a look at what it would look like to buy here in St. Augustine. Now, of course, this is going to vary on what you're looking for, but I just took the average sale price here of $380,000, which is pretty much going to be a 3 bedroom, 2 bath home with a 2-car garage, let's just say, for our sample here. Now, your monthly payment on that, if you're putting 20% down, is going to be roughly $1,800. It's going to be a little bit more than that, but you're going to have to put your 20% down, and then you're also going to have to pay for your closing costs on the home. Your 20% down is going to be roughly $76,000 on a $380,000 home, and then you're also going to have to pay closing costs associated with the loan and closing on the home. So that's going to be roughly $13,000. Your total out of pocket is going to be around $90,000 for a home that you're looking to purchase around $380,000. Now, of course, you don't have to put 20% down. You may qualify to put 5% down, which would be roughly $19,000 on a $380,000 home. Now, you also have the same amount of closing costs, which is going to be $13,300. So your total out of pocket would actually be around $33,000 to get into this $380,000 home. Your monthly payment then would be roughly a little bit over $2,100 a month, but it just depends the opportunity cost for you. Would you rather put that 20% chunk down and lower your monthly, or would you rather keep that money cash in your bank account and pay a little bit more on the monthly? Just depends on your certain situation and what your bank will allow you to do. Guys, I hope you are getting a little bit of value out of this video. If you are, please do me that solid and tap that subscribe button below. Like the video and comment. Like I said before, we do have videos coming out every week, so if you're looking to stay up on St. Augustine, then this is the channel for you. So what does this mean for you as a renter or as a buyer? Well, there are some things to consider to be able to make that decision. What's going to happen in the future? Well, experts are expecting our area to appreciate 14% in the next year, and that's the most conservative number. To give you an idea, on average, homes appreciate 3% year over year, according to the entire nation. So 14% is way over that, and this past year we experienced 20%. So that's going to be, if we're looking at our average sale price now, that means our average sale price next year will be $433,000. That's almost $50,000 within a year of time of waiting. So if you are looking to rent and maybe buy a year later, are you going to be able to afford the same type of house you want a year from now? The other thing that I'm sure you've heard of is our historically low interest rates. With our low rates, of course, you have people chomping at the bit to get these low, under 3% rates, which is causing the demand to go up, which is causing our pricing to go up as well. Well, what happens when prices go up and interest rates go up? Well, that's exactly what they're expecting to happen. Right now, interest rates are 2.87%, around there. We're in September of 2021. By the end of this year, they're expecting them to climb up to 3.5%. So whether it's this year, or if you're signing an annual lease right now, or it's a year from now and it's up 3.5%, that will make a huge difference in your monthly payment and how much interest you pay over the life of the loan. So worst case scenario, if you're renting or you're buying or you're trying to make the decision, what could happen in a year? Well, if prices continue to go up and interest rates go up, then we could take a look at the financial situation of what that would look like a year from now. Now, purchase price and interest rate could go up in a year, barring we don't have a hurricane or we go to war, one of those major events. All of this could happen. So what does that mean for you? So let's take the worst case scenario. You're looking to get an annual lease and you're just going to wait it out for a year and buy next year. Well, if you're putting 5% down on a conventional loan on a $433,000 house, that's going to be roughly $22,000. So that's only gone up about $3,000 from that $19,000. That's not too bad. Your monthly payment is going to go up to about $2,300, and that's going to be about $200 a month. So that's actually not too bad either if you're okay with affording that. But that's the difference that it's going to make in 1 year. So Tom, that's actually not that bad. $2,000 to $3,000 on the down payment, and then you have $200 to $300 a month on your monthly mortgage. If you're waiting a year, that's not a big deal. Well, what you missed out on was the appreciation of your property for a year. So if you gain that 14% appreciation, that $50,000 in equity, that's what you lost out on. And then also you lost out on the low interest rate. You could have locked that in, gained that equity, got the low interest rate, and kept it moving. So what do I consider to be a deal in the most competitive real estate market that we've ever seen? Well, me personally, I think that your best deal is going to be looking into the new construction section. Right now, our resale and our new construction pricing are really neck and neck. Even with the increases in pricing on the new construction side, with the adjustments in the supply chains because of the lumber pricing and all of the issues they've had with the transportation of the goods, the new construction has made adjustment on pricing, and the resale market is right along there with it. The only caveat with the new construction is that you're going to easily be 6 months to a year, if not longer, to be able to move into your home. So you have to have the ability to wait in this market. But here's the thing, is if you lock in at this price and then the market appreciates 14%, you've got a brand new house that's already gained equity since the contract price that you've locked it in a year prior. So I have a lot of buyers that are going into their home walking in with equity because of how our market's appreciated this past year, because they signed a contract last year. The same model that they just bought is probably up $50,000, if not more. And then for it to be on the resale market, it's going to be just as expensive, if not more, than buying a new construction home right then and there because of the demand in our market. On top of that, a lot of builders do incentives for people to use their preferred lenders. So I've seen, one company that's building the home will contract out a bank to be their preferred lender. So any leads they get, they will send to that bank. And then in turn, the bank will pay a certain percentage of closing costs, if not all of it. There's some new construction builders that have their own mortgage company within their umbrella corporation, which will pay your closing costs and buy down interest rates. So if you're looking for the best deal in our market, new construction, you're gonna have all that. You're gonna get the best interest rate. You're gonna get a brand new house with a brand new roof, brand new AC, brand new hot water heater. Everything's brand new. They all come with warranties more than likely as well on the structure, and probably a year to 2 years for material defects throughout the home. And you also could potentially get your closing costs paid for, which is money that you're keeping in your pocket today. Guys, and that is it. Thank you so much for watching. I hope you got a little bit of insight and gained a little bit of knowledge on renting versus buying here in St. Augustine in our current real estate market. If you did get a little bit of value, please do me that solid and tap the subscribe button below, like the video, and comment. If you have any additional questions, please feel free to reach out to me directly about maybe what your personal situation or renting or buying and what you might be able to do here in our market. Give me a call, shoot me a text or an email. It all goes directly to my phone, and I'm here for you.